So chapter 7 is, so we're starting now with managerial accounting. Financial reporting is over. You don't have to prepare any more income statements, balance sheets. You don't have to calculate on the quiz. You don't have to calculate the depreciation. So let's move now to the managerial accounting. Managerial accounting, what was that about? Is we're going to focus on the future of the company. So for which type of business going to apply for all the kind of business? So service, merchandising, manufacturing, non-for-profit, profit, everything. All those businesses require managerial accounting. I mean, managerial accounting can help them to make a better decision. Applies to all forms of businesses, proprietor, partnership, corporation. Help you for the cost management. It's which team's gonna rely every team. Production, marketing, engineering, accounting, decision making, everybody. Similarities, both managerial and financial accounting relying on the economic events that's happened in the future, in the company, in the past, but managerial accounting is focused on the future rather than financial accounting is focused in the past. Primary users are also different. Let's see quick comparison between financial and managerial. Based on who using the financial statements, financial accounting is used by creditors and investors, where the managerial accounting is used by the managers in order to affect the future operations in the company. The responsibility and the type of frequency in the report, financial statements are prepared. The shortest period is monthly, then quarterly, semi-annually, and annually, where the intermediate for the management accounting, the shortest period can be a day, it can be hours. We need that report as soon as possible in order to make decisions. The purpose is the general purpose for the financial statements and specific purpose for the management reports. Content of the reports, what's on those reports, on the financial reporting, the content is the entire company where the management report specific part of the company is going to be client, is going to be product, and only the relevant data to that specific division or that specific product is taken into account. Verification process in the financial reporting, we have a lot of verification, a lot of approvals, where in the management accounting, there's no verification, and there's no approvals, there's no rules, there's no requirements. Give me the report as soon as possible and make it helpful for my decisions. That's what's the motto of the managerial accounting. Now let's move on for the three activities which are required for the management accountant or for the managers. Once you establish your goal, as we said in the classroom, once you establish your goal, then you have three broad functions. First is to plan, second is to direct, and third one is to control. What do we have to plan once we establish the goal, we're gonna assess and evaluate the possible alternatives that we can achieve the goal. Then we're gonna select the alternatives that bring us to the goal as fast as possible and as efficient as possible. During the process, we're going to identify key objectives. And the main key objective here is for the companies to create value for the customers. By creating value for the customers, we're going to add value to the business. Once we establish that, we can prepare the budget and that will complete the planning process. Then we're going to directing. Directing and motivating is vital part of this process. Why? Because we have to follow the plan. We have to follow the path that we choose to achieve our goal. How are we going to directly motivate our employees to achieve the goal that we have in mind is we have to implement the objectives which we set up on the planning stage. We have to provide some incentive to the employees. We have to hire and train the employee, make sure they understand what we're trying to achieve and how we're trying to achieve it. The last stage is the controlling. On the controlling stage, we're going to compare current situation with our plan. The whole point is we to meet the goal. We to reach the goal that we set up on the first stage. Controlling, it can be set up as an important stage. I mean, all the stages are obviously important. Which one is the most important? It's very hard to tell, very subjective. All the stages are important. Without any of those stages, you won't be able to achieve your goal. So in order to achieve your goal, you have to follow those, you have to follow the plan, you have to directly motivate yourself, and you have to control. So how can you make sure that you do the good decision making? By the outcome of your actions. If you get the goal that you wanted through the planning, directing, and controlling, you did a very good decision making. Organizational chart. I believe that's where we stop in the classroom. Organizational chart, again, this is how the organization identify the interrelationship of the activities inside of the business and how delegate the authorities within the people which are involved in the operation of the company. We have two main categories of the staff. One is the line position, the other one is the staff position. Which one is the line position? The line position is the one that directly is involved in the company main revenue generating operating activities. The other way you can look at this one is those are the people who are responsible, who are making decisions, who are deciding on which product should be discontinued, which product should be more produced, what new product we should produce. Those are the ones who have to take a responsibility, and those are the ones who have to explain later if something doesn't go by the plan, why it didn't go to the plan. Staff position is the one that involved in the everyday activity, and those are the ones who support the line employees. So the corporation chart, organizational chart of the corporation, it's going to look like this, where on the top you have to understand it's always the shareholders. The corporation exists because somebody wants to generate profit. Who is that person? Those are the shareholders in terms of investors. As we saw from the financial accounting, we have those investors who invest in the company. The company after that purchase the assets and start operations. The shareholders, obviously, they're not going to be the one who operates in the company. They're going to appoint board of directors. The board of directors is going to hire the president and the chief executive officer. Those two, they're going to hire the people below them, and that's how we're going to create that decentralized system for only one purpose, to achieve the goal of the shareholders, which is to provide the profit to the shareholders. Then we're going to have general counsel secretary, a chief financial officer, a vice president of the operation, and keep going, keep going, keep going. Chief executive officer typically is the highest position in the office. Primary responsibility will be to make the major corporate strategic decisions. And he's going to manage the overall operation of the company. He's appointed by board of directors, means that he's going to be responsible to the board of directors, and the board of directors is going to report directly to the shareholders. Chief financial officer is the one responsible for the accounting and finance in the company. He can be supported by controller if he doesn't want to be the controller itself, and he can have a treasurer. Controller will be the one responsible for mostly for the accounting records, so is going to produce the internal and external report. So that will be for the internal users and external users. And the treasurer is the one who's going to maintain the cash. Cash position is going to dealing with the cash in the company. First question today will be the officer who is responsible for counting financial issue in the company will be which one?
B.
B, of course, Chief Financial Officer. Now, you always hear that term that the good ethics lead to good business. That comes to the point, what exactly is the ethic? Ethic is the interesting idea about what's right and wrong, which is developed by the environment and the society that we're living currently in. So, what's happening if the ethic is not followed? Well, then that's where we have those major scandals, major uh, world crisis. And every time when something like this happen, the people sit down and start developing a new standards or new regulations to avoid those things to happen. Some of the causes of those scandals are obviously too much desire of the corporate executive to achieve profit, lack of overseeing the board of directors, poor work of the external auditors, and lack of the um, in the process of justifying and verifying the information which is provided from the managers. The other thing will be not understanding financial ratios, not doing proper financial analysis. And some of the other issue can be aggressive accounting, uh, and that means applying aggressively accounting principles. All those can result of unethical behavior. So for that reason, more and more importance now is given to the ethical behavior organization and the management, including the CFO, including the accountants, including the treasurers. How are we going to create environment which is helpful and creates a good business ethic in the company? Well, we have to monitor and evaluate the employee. We have to examine and be careful with the over-ambitious budgets, which can produce unethical management action. How can we do that? We can engage the employee to feel more part of the company and part of the success of the company. Obviously, ineffective and unrealistic control can result to declining quality of the products. In other words, we're trying to achieve balance between the good ethic and good business. One thing that can help us is to create a codes of behavior, codes of ethical standards. Those are created, sadly, always when something bad happens. So you as a manager, I want to be on the preventive side rather than the fixing side. Don't put yourself in the position that you have to fix the mistakes that you have done because you haven't prepared yourself for what's coming. Be on the preventive side, prepare yourself or over prepare yourself and make your life easier. Later on, the consequences that you're going to face will be favorable rather than unfavorable. Always put yourself in a good situation. Having that in mind in the corporations, always have a code of conduct. Let the people know what is the right thing to do, what's not the right thing to do, what is the ethical, what is not ethical. Communicate those things with the people, make sure they understand them. Here we're coming to the corporate social responsibility. Yes, the board of directors exists because the shareholders wants more profit. Yes, the president of the company or CFO, uh, CEO exists because the board of directors wants to create more value for the shareholders. But today we try to also involve the corporation in the process of creating a sustainable business practice, which later is not going to harm the environment. For that reason, people come up with the triple bottom line, which is people, planet, profit. Obviously, as you can see, profit is the last one on this list. However, it's always first. Don't forget. But in order, what's the value to have a profit if there's no people and the planet don't exist? Something to think about it. So for the triple bottom line, which one is not part of the following? Which of the following is not part of the triple bottom line?
Plants.
Plants, right? Plant is part of the planet, right? So it's part of the bigger category. Let's move to the trends in the managerial accounting and how the managerial accounting can help your life and make your life easier, or where you can find the managerial accounting. First, the service industry. North America, as you can see, moving to the service industry business. All the production is pushed in other countries. Now we have signs that our neighbors from the south want to change that one. Let's see how this is going to happen. But in general, economy shifted more to the service industry. That means require new operation control. And many of the techniques which are developed for the manufacturing company now are applied to the service company. Which are those service company? Those are part of the service company, not limited to those, but those are part. And you can see what kind of questions the manager should have to deal with in those companies every day. So we have a logistic company, transportation, we have package deliveries companies, we have a telecommunications company, we have professional service company, we have financial institution, we have healthcare. We can go over and over. Entertainment company, professional sports company, all the company which providing services to the people. And the questions that management those company have to solve. Now, why do we have to and how can we solve those problems is which ones come handy is the value chain. Now, I want you to know what the value chain is because I'm going to ask for it. On the second quiz, I'm going to ask what the value chain is. So please make yourself a note. So all the activities associated with the providing of product or services, which add value to the product and the services to keep the customers happy. You have to understand from where all the money that you want is going to come. They're going to come from the customers, and customers always only going to pay you if you provide something which is valuable to him. So the question is, how can we create value through the value chain? So in the beginning, you always have to remember there's nothing. In the beginning is nothing. We start with the research. What the customer wants. What is the item that the customer gonna want in 10 years, which they don't have today? Then we start developing. And we're coming with the product design. Once we come up with the product design, then we start the mass production, which is the manufacturing cost starting. When we start manufacturing, first we have to buy the raw materials, then we have to start the production. When we start the production, we're going to have our product. Once we have the product, we have to let the people know that we have a product that's going to change your life, which is very valuable, and you want to spend money for this product. Means we start a sales and marketing campaign. Once we do the sales and marketing campaign, now we magically have to transfer that product from our warehouse to the customer's hands, either through the merchandising company, either through direct delivery to the client. And the last thing that we have to do is make sure the customer is happy. We have to keep the customer relationship. Why? Because you don't want profit one time. You want profit constantly. Means that you have to have a good relationship with the customer so you can sell them more. What will be the more? The more value through the product that you create through your value chain. So the other thing is technological change. You see, there's a lot of changes in technology and there are more changes coming. Enterprise resource planning system, it's not artificial intelligence yet, but it's getting that point because as you can see in any enterprise resource planning system, any software now we have that artificial intelligence element. So what is the enterprise resource planning system? That will be the software system that's managed the value chain. What's the value chain? Creating a product or any stage adding value to that product in order we to create value for the customer for which they're going to pay. That will be the large company which running those enterprise resource planning system. They have a lot of software packages inside, which helps them to create a different reports for different purposes. Computer integrated manufacturing, that's another idea, which we're producing a product without humans' help. Business-to-business e-commerce via internet is another business that has to be developed or going to be developed. The other thing, you can put so many things. The blockchain is here, which it's due to be developed and implemented in our life. Management accounting today is also involved with the just-in-time inventory method, which just-in-time inventory method later on we're going to see is linked to something else. That is the inventory system which helps you to produce only the inventory that you can sell right away. So basically, you trying to eliminate the inventory cost. So you have to have a very strong relationship with the supplier and the customers. Supplier to ensure that all the delivery and the quality of the products which coming into your hands are met. And the next thing is once you produce the product, is go directly to the client and client base right away. The other one is the time quality and total quality management, which is philosophy, which you're trying to eliminate the waste and to increase the efficiency. So for that reason, you have to find time to identify which are the defects, which are rework cost, what's the warranty cost. Once you find those one, you try to redesign the entire product or the process of producing the product to reduce and they eliminate the defects to minimum. Activity-based costing is another tool that's going to help you to run your management accounting effectively today, which will be involved with assigning the cost to the product. Assigning the cost product to the product is important part we're going to see later in the class. But with activity-based costing is going to help us to assign only the cost that the product actually using. We're not assigning the cost to the product just because we have to assign the cost somehow, but because that was used by the product. Activity-based costing, we're going to help you to identify where are the potential for developing your business, where is the potential of using the resources better than you currently using them. And that's going to help you. The final result will be more accurate product costing. so you can find the actual cost for your value chain. Then we're going to the theory of the constraints. Theory constraints is related to the identifying which are the limits that you have. We all have limits. We all have strengths and weaknesses. In this case, you're chasing the constraints, which are the limitations. Finding the which one is the limited resource. In the personal level, in the human, in our life, the only limited resource that we have is not the money, it's the time. So once you have identified the limits that you have in your life and your company, then you can work and try to create more value for yourself by using the resource, the limited resource that you have more efficiently. And since you know that the time is the only limited resource, focus on how you're spending your time. Because at some point you're gonna run out of time. That's how can help you to achieve your goals better, faster, and more efficiently. Next idea is the lean manufacturing. Lean manufacturing is usually linked to the just-in-time inventory. Lean manufacturing is, again, you manufactured only to achieve the demand from the customers. Today, as you can see, we rely less and less on the labor, and the customer is the one that dictate the requirements. So for that reason, we're going to create a process which relies on the demand from the customers, and that demand is going to drive the requirements for the supplies from our vendors. And the goal of the lean manufacturing is to eliminate again the waste, reduce the inventory, and concentrate on the meeting the customer needs, creating more value for the customers. Then we're going to the lean manufacturing, the 5 basic principles, which are first to define which are the values. How can we get to that value? Make sure that that value actually flows. We can implement a pull system, and then we can constantly improve it until we reach a perfection. Balance scorecard is another idea that helps managers to create value for the customers by increasing the value of the business and the product and the services. So that would be performance measure approach, can be used as performance, can be used as a communication. What we can communicate through the balance scorecard, we can communicate and explain the strategy that we choose for our company to our employees and to our customers. And after that, we can measure the performance. Balance scorecard has 4 perspectives. One is financial, 3 non-financial. Financial is obviously financial is the financial perspective, internal business process, customers perspective, internal business process, and learning and growth are non-financial measures. How the balance scorecard work? If we like, I hope we're gonna have chance to later in the course to explain again this. If we don't, the balance scorecard is very powerful tool if you can use it effectively, and if you know how to use it, like everything. So it starts with the learning and growth where you are right now. So once you learn something, did you have a chance to improve your business process? Can you implement whatever you learn into your business process to become better at what you're doing? If you've done this, customers gonna be more happier. If the customers are more happier, then you're gonna see more sales. If you don't see the sales, it's because of the customers. If you don't see the customers, that's because whatever you're producing in the internal business process, it doesn't work. So what you have to do is you have to learn. and growth. Either you're gonna learn and grow, either you're gonna learn and not grow. And then you're not gonna have financials. So let's see from all the activity associated with providing a product or service, those referred as what?
A, the value chain.
That will be the value chain, yes. All the other things are techniques for the management accounting. And from the lean production, which of the following is not part of the 5 principles?
Letter B. B.
C.
That will be aim to reduce the defective units. That will be objective for the time quality management system to reduce the defects. And that will conclude the chapter 7.